As you know, the financial landscape is shifting and interest rates are on the rise. Now, if you've got a variable rate mortgage, this may be a cause for concern, but don't worry because today we're going to discuss some options that you may consider to help ease any stress. You came here for the truth, so let me unveil that for you. My name is David Quintieri, and I have been bringing all of this financial wizardry stuff into the YouTube world, making it real simple and real easy. I've produced over 4,000 videos. I've been knee deep in the trenches, just simply trying to make all of this stuff simple for everyday people like you and I, okay? And in today's video, there's something real big that's happening. If you look over here, you can see that the Bank of Canada says mortgage payments could spike as much as 40%. I mean, it's crazy. Think about it. The prices that people are paying already are too high, and the consideration that they could become 40% higher, or in this case, they're saying 20 to 40%. I mean, it is just unheard of. In light of the higher borrowing cost, the Bank of Canada is more concerned than it was last year about the ability of households to service their debt. More households are expected to face financial pressure in the coming years as their mortgages are renewed. So it depends on where you live, of course. This affects people in different ways. In Canada, you don't get a mortgage for 25, 30 years. You do pay it off over that period, but you have to basically renegotiate or refinance that after a period of, let's say, 3 to 5 years. Same thing happens in other countries as well. For those having variable rate mortgages, I've got some information, okay? Because you have an option that you can consider, and that is a rate cap or even a rate lock, if your mortgage does allow it, okay? What does that mean? Let's look at that. A rate cap puts a limit on how much your rate can increase in a specific period or over the lifetime of your loan. It's like your safety net against skyrocketing rates. There are generally two types of caps: the periodic adjustment cap and the lifetime cap. The periodic cap limits how much your rate can change during any single adjustment period, while the lifetime cap controls how much your rate can rise over the entire duration of your loan. Now, you might be thinking, what if I could freeze my rate right where it is? Well, some variable rate mortgages offer exactly that option, and it's called a rate lock. This means that you can switch to a fixed interest rate at some point during the loan term, essentially freezing your rate for the rest of your loan's life. However, it's important to remember that these options may come with additional costs or slightly higher interest rates. The key here is to weigh the pros and cons. For you, you got to do that for yourself, and the extra cost versus the security that it provides. The decision is very personal, depends on your situation, your future plans, your expectations of where interest rates are heading. Now, that's a contentious debate right now because many see what we will experience in the near future is that we'll have rate cuts. However, the Federal Reserve is saying, no, not going to happen. And other countries are kind of staying in that same zone. So we really don't know. Remember, I'm here to provide guidance, but it's always good to seek the advice from your bank, from your mortgage professional, and so on, because every mortgage and every situation is unique, and a professional can give you tailored advice that's best for you. So as we go through these rising interest rates, I'm going to continue bringing the most important information. So the best thing that you can do right now is to simply share this with somebody that you believe could benefit from it, and I would really appreciate that very much. Hit that thumbs up button, and of course, if you have any other requests, any other information you want to see, I'll make that video just for you. Take care.